Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the forexpeacearmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit forexpeacearmy.com forum and read my analysis for the week before watching this daily video. Good morning, welcome to the Forex Daily Video Research. Today we will shift to Euro currency finally. I know guys, you asked me about this pair, what to expect from the Euro currency, because we haven't talked about this for a long time. Now current research will be a bit larger than usual because we have to take a look at the weekly time frame also. So this is the weekly chart of EURUSD. There are a lot of stuff here, so let's move gradually through it. First of all, we can see that the weekly trend is bullish. The red line is MACD predict indicator. Also look at this pattern A, B, C bottom. Market has hit 618 without any re-inspection, move accelerated directly to the 100% expansion around 140.46 and hit weekly overbought level. The blue line is Jed slightly predicted, shows level of overbought. Now market didn't show any meaningful retracement to the downside and just move sideways when it hit overbought. During the previous week, market has attempted to move higher but failed and close again in this consolidation. This is the wash and rinse of the previous high, one of the bearish signals. There are no barriers above the market, no Fibonacci resistances, no overbought, because market has normalized the overbought condition by moving sideways. At the same time, market couldn't move higher, couldn't continue the move to the upside. In general, you can see that AB leg a bit slower than CD. This we can see the acceleration, and market accelerates directly to 100% expansion without any respect to 618 and hit weekly overbought. So this price action usually leads to 1618 expansion target around 149.48, but only after some retracement to the downside. Usually the depth of this retracement is about 618, support from the recent swing up. So from this low to this high, usually market shown reaching the 618 Fibonacci support around 132.32. Okay, this very interesting current situation on the weekly time frame. So on the short term, I expect the retracement to the downside, and I suppose that there are two levels that are very suitable for the as a target of this possible retracement to the downside. The first level is 136.31, that's already a weekly a monthly rather, pivot support 1, and the second area is my preferable 132.32, 133.58, the weekly confidence support that also includes these previous highs, and monthly pivot support 2. So one of these areas should hold the market from the down move if both are still in charge and if market still intend to move to 1618 target. Also take a look, we can see that trend will remain bullish until 128.67 area. So when time will pass, this level will drift higher a bit, but in general it will be bullish until this area of confidence support. So any of these levels will hold the weekly trend bullish. Also take a note that the monthly market is also at a monthly overbought, so this is a bit strong barrier and market should struggle to move high, and I think that this wash and rinse is the first bell for the possible move to the downside, medium term retracement to the downside. Okay, now let's shift to the daily time frames. This is the first daily time frame. It's a bit sophisticated, this recent price action. So what do we see here? First of all, this is the consolidation between these two horizon lines. Market has break it to the upside, reached daily overbought, but couldn't hold there and returns back to this consolidation. Also take note that market accomplished this 127 butterfly sale pattern. So this area around 142.80 roughly, This is the precisely target of this butterfly from this high to this low. This is 127 expansion. Now, this third important moment, look at this red line, this MACD predictor and recent price action. You see that trend is bullish because prices are above the MACD predictor, but price action is not. This the writings right here, that's negative dynamic pressure right here when the price action doesn't confirm the trend. It means that market has the solid probability of moving to the downside. What we can say about the targets. First of all, as you can be able to see on our previous Swiss franc trade, the target of the butterfly is 1618 expansion from the whole move to the upside, from this low to this high. 1618 expansion to the downside is the area around 133. This is the target of this possible target of this butterfly. Also, if market will return, and it's already has returned down to this consolidation, it should reach at least the lower border of this range, and if it will break it to the downside, the target, the rule, some rule exists that if a market will break some range, it usually move to the direction of the breakout at least for the width of this range. So it means that market, if it will break out this range, will move to the downside from this range. It's also about 133. This area coincides with the second level of support on our weekly time frame. Let's take a look at another daily time frame to look at some support levels. So also you can see, by the way, this nice bearish divergence with the MACD indicator. Market has hit overbought daily. Now let's take a look. This is normal the FIB support because market has closed below it. The next FIB support is daily confluence support and monthly pivot point around 138.85. The second area of support that is very strong for the nearest days. This is the second daily confluence support, 136.51, 136.63, that coincide with monthly pivot support 1 around 136.14 and daily oversold. So this is a strong area. If market will break it below it, market should stop around this area. Also, we should be aware of possible wash and rinse of the breakout of this range, because just below the market, very strong area of support, market can break to the downside, clear out the stops just that's has been placed just below this area, struggle with the oversold and with this area, and returns back to this range. So this scenario also can happen because this is a really strong area of resistance. Meantime, at the short term, on the Monday, Tuesday, I think that we can enter on the short side of the market with the target at least this area of support around 136.60. Sorry, this is hourly chart. Okay, this is 4-hour chart of euro currency. You can see that excellent sell signal on the MACD, very good angle of piercing two lines. The trend is bearish. Market has shown the solid thrust to the downside. This is the weekly pivot point from the next week, 140.56. Weekly pivot resistance 1 around this area, 142.57. This is the monthly pivot point. So we can see the solid thrust to the downside. Unfortunately, there are no some retracement, because I can estimate some ABCs to definitely estimate the possible level for entering on the long side, or sorry, on the short side. But I think that area around 141.50 right here, it's about 618% resistance from this high to this low, and about 50% from whole swing to the downside should hold. Market can move here if we can see some sign of weakness, maybe some hourly double repos, some bearish engulfing patterns, some sign of it. We can enter on the short side of the market with the target. First target is the monthly pivot point, and the extended target around 136.60 area. Also, we can see if market will open lower on the Monday, it can show some move to the downside till this area around 139.75. We can try to enter on the short side during the retracement up to weekly pivot points. If market will show some signs of weakness right here and move below the weekly pivot point, this will be a sign of weakness, and this scenario is also possible. So right now it's very difficult to establish the possible levels for entering on the short side, but if you are a day trader, not intraday trader, so the possible area is about the 618 resistance from a recent swing to the downside. I suppose that this level should hold, or even if market will open lower weekly pivot point, market can be flirting with weekly pivot point and then continue move to the downside. This will be the bearish scenario, but that being said, I have the bearish view on the euro currency, and I think that euro is ready for the possible medium-term retracement to the downside. I hope that the level around 133 should hold market from the deeper retracement. Only if it will happen, market and have the chances to continue move to 1618 weekly expansion target around 139.50 target.